All right, what is going on, fellers and fellas? No. All right, what's going on, guys? Today, I'm going to go over a swing trade that I took that I was in on Sunday, and I just got out today. Kind of a recap, kind of whatever. So I'm trading MCL on a live account, and this trade went pretty well. It wasn't super flashy, it was pretty simple. I was trying out a couple of new things. But the main point here is that I'm attempting to, well, I'm trying out the live account. I'm trying to see if it's any better than prop firms, to see if it adjusts my psychology a little bit. But this is my first trade after like formally making that switch. And I just wanted to go over that a little bit. This is a small account, sub $1,000. I am trading micro crude oil contracts, and I'm basically one contract at a time. So each tick is typically like $1, and so pretty small swing. So that's already pretty nice off the bat in terms of like psychology. But also one of the largest switches that I've been making is the 1-to-1 risk to reward ratio. I have been thinking about this more and more lately, and I believe for me personally and my psychology, if I'm going to day trade and if I'm going to swing trade, I have been thinking that the 1-to-1 risk to reward ratio is going to be, psychologically speaking, what is going to propel me forward. It should, in theory, increase my win rate, and really the objective is if you're over 50%, you can be profitable here. So I find myself, at least in my history, I found myself trying to do 2-to-1, 3-to-1. For the most part, I was like 2-to-1, but even on 2-to-1 sometimes, like when you would trade NQ or MNQ for that matter, the swings would be pretty wild and unpredictable. And you know, even in a 2-to-1 risk to reward ratio, you can find yourself like bouncing around a lot of times inside of ranges. The 1-to-1, no overthinking things, no questioning things, no arbitrary targets, which is, I think, is the big thing. I would have looked at this previously and thought, you know, maybe there was liquidity here, you know, at the top of this candle, and this is the 4-hour chart. I would have historically thought, hey, there's probably going to be, you know, liquidity up here that we got to sweep, and I would have set a target here. But had I done that on this specific trade, I wouldn't have played. So that's just this one particular instance. But again, no arbitrary targets. It's just I put my stop at a logical stop place. I put a 1-to-1 risk to reward ratio, and then I'm done. And today it worked out really well. I got into this trade Sunday evening, and a couple of the confluences that I was looking for. I had this down trend line. We've been downtrending for a while, but on the daily time frame, we have been bouncing above this demand zone and having some pretty decent reactions here. So I've really been keeping an eye on that, and that's especially what happened a couple weeks ago here. And then a little bit of consolidation before what I believe to be an attempt at the downtrend line. We also closed this gap right here, which was another additional confluence, but I didn't want to overcomplicate this process. I literally just played off of the gap fill here, a nice movement off of the demand zone. This was actually a 50%, more than a 50% retrace here, almost a 61.8% retrace. So that was another additional confluence. Again, everything just felt pretty good. Again, this was a swing trade. That was the goal. I just wanted to hold long term and just let the trade play out, and it worked out really well. So I just wanted to share that. Nothing fancy, no crazy strategies, just a couple of confluences and trusting my instinct on this one. And what's really nice is the 1-to-1 risk to reward ratio, and maybe this was just a coincidence. Essentially, the price traded right into that area and then came right back down. So it tapped me out and I was out. Had this been even a 1.2 or a 1.3 or 1.4 or 1.5 risk to reward ratio, I would not have gotten out of this trade. So again, I got out of my trade, made my money, and I'm moving on. So it's also nice knowing that this is a personal live account and that there's no, in terms of like prop firm rules, there's no arbitrary rules, there's no There's nothing like that. You know, I don't have to stress. I don't have to do all of these rules that make me change my trading. I can just trust my strategy, trust my instinct, and then ultimately, I think with the 1-to-1 risk to reward ratio is trust the probabilities. And you know, I'm not profitable yet, but you know, maybe the 1-to-1 switch and maybe a live account switch. You know, maybe it's not even just a live account. Maybe it is just the 1-to-1 risk to reward ratio. I will be trying the 1-to-1 across prop firms, across this live account, options trading. I'll be trying as much as I can this 1-to-1 risk to reward ratio and just sticking to my guns and seeing how the probabilities play out. But ultimately, that's all I got for you. So I will see you all next time. Peace.